Okay, Elisa?
Yes, Jan?
Okay. Something seems off here.
Did you come out? Hi, Chris. Hi, John.
Hey, everybody. Okay.
Apparently John's not going to be late.
Yeah.
I aren't I? I should be. Oh, I'm at least 2 minutes late. Yeah. I really insist on being late so that I get a warm welcome.
All right, let's try that. All right, Elisa,
right.
Are we all set?
Yep, I think we're good to go.
All right, excellent. Let's go ahead and call the roll and get started.
All right. Chair Rogers,
Here.
Member Schwethelm,
Here.
and Member Sawyer.
Here.
Let the order reflect that all subcommittee members are present.
Perfect. Thank you so much. Just a little bit of quick housekeeping. Just a reminder for folks to stay on mute when you're not discussing issues. Staff will also be muted as well. If folks are joining today's meeting, you'll be able to participate at a number of different points. And if you join by phone, your number will show up as resident with the last 4 digits of your number. So listen for that when we go ahead and call folks. Outside of that, Madam Host, do you want to walk us through how people can engage in today's meeting?
Yes, thank you. At each agenda item, the item is presented. The chair will ask for the subcommittee members' comments and then open it up for public comment. The host in Zoom will be lowering all hands until public comment is open for the agenda item. Once the chair has called for public comment, the chair will announce for the public to raise their hand if they wish to speak on the specific agenda item. If you are calling in to listen to the meeting audibly, you can dial *9 to raise your hand. The host will then call on the public who have raised their hands. Public comment will be limited to 3 minutes and a timer will appear on the screen for the subcommittee members and public to see. Once all live public comments have been heard, the meeting host will read emails submitted. If you've provided a public comment on an agenda item, but also submitted an email, your email comment will not be read during the meeting. Additionally, there is one public comment period on today's agenda to speak on non-agenda matters, which is item 2. This is the time when any person may address the subcommittee on matters not listed on the agenda. And that is it. And I'll turn it back over to you, to Chair Rogers.
All right, and we will start with item number 2. That's our public comment for non-agenda items. If folks are interested in speaking on this item, go ahead and hit the raise hand feature on your Zoom, or if you're on your phone, hit *9. All right, and I am not seeing any hands raised.
There were no public email comments received.
Excellent. Thank you so much. And we will move on to item number 3 then, approval of the minutes. Council members, did we have any amendments to the April 8th, 2021 minutes?
No.
Okay, then we will show those adopted. Let's go ahead and go to public comment, see if there's anyone who had a correction. And Madam Host, did we have any voicemail public comments?
No public comments were received via email.
Okay, then we'll move on to item number 4, item 4.1.
All right, Chris.
Good afternoon. I'm Chris Lynch from Jones Hall. In anticipation of your long-term capital planning exercise that Jen and Alan are going to walk you through, I was asked to provide some context for that discussion, namely to provide a high-level summary of various funding tools for public capital improvements and ongoing public services. It's a fairly large topic, so hopefully I've struck the right balance between giving you enough information for your policy discussion, but not taking too much of your time. Next slide. I will briefly discuss the following, if you could, next slide as well, sorry. I'll briefly discuss the following infrastructure financing options, which are the most commonly used tools by California cities. Next slide. General obligation bonds are the most straightforward public financing tool. In this option, the city issues bonds payable from an increase in the ad valorem tax on all property in the city. General obligation bonds are most commonly used for improvements of community-wide significance like libraries, community facilities, parks, sometimes city halls, things like that. Although recently a number of California jurisdictions, Santa Clara County, Berkeley, Emeryville, but unfortunately not Santa Rosa, have approved general obligation bonds for affordable housing. The biggest hurdle to using general obligation bonds is that they require a 2/3 approval of the city's voters in a citywide election. The key advantage of issuing GO bonds from a public planning perspective is they don't impact the city's general fund because the bonds are payable from new ad valorem taxes. Also, because the ability to increase ad valorem taxes is the strongest available credit among the options available to cities, the GO bonds also offer the lowest cost of financing. There's one more material limitation associated with GO bonds. They can only be used to finance acquisition and improvement of real property, no maintenance and things like that. Next slide. Lease revenue bonds or certificates of participation are the second strongest financing tool from a credit perspective because they're paid from the city's general fund. They don't require voter approval, and the city is required to covenant to budget lease payments, which is basically debt service, on an annual basis. Lease financings are most commonly used for a wide variety of public infrastructure. The advantage is that no voter approval is necessary for issuance. But if you're concerned about burdening the city's general fund, then you would still need some kind of voter approval to increase tax revenues to make the payments on those lease financings. Either some of the other sources we'll talk today about parcel taxes or sales tax or transient occupancy taxes. In addition, one other disadvantage of general fund lease financings is that they rely on general fund assets in order to accomplish a lease-back transaction. And so if you're limited in the amount of assets you have within the city and you want to undertake a large financing or a large number of smaller financings, then that can be a limitation. Next slide. There are two types of land secured financing options that are available to the city. Melrose special tax bonds, which are payable from special taxes levied in a community facilities district or CFD, and then special benefit assessments. These financing tools are attractive because, like general obligation bonds, they offer a new source of revenue to pay for the capital improvements. CFDs require a 2/3 vote because they're special taxes. So they're used most commonly to finance infrastructure as part of a new development project where the landowner developer is the qualified elector. As a result, CFDs most commonly finance public infrastructure that's needed for new development. However, a CFD could also be formed on a citywide basis, assuming you had the ability to secure a 2/3 favorable vote by the registered voters. CFDs are famous for offering the ability to generate a designer tax, which links the amount of the tax to the property's use, often on a very granular level. So it could include the size of a lot or building density, or it could even include the activity occurring on the property, such as truck trips or even hotel room occupancy. However, special taxes can never be based on ad valorem or property value. Next slide.
Chris, could you, I'm through the mayor, could you go back to that, the prior slide, the land secured bonds? Could you go over what you just said again?
Sure. If are you talking about kind of the designer tax, what the tax can be based on?
Yes.
Yes. Yeah. Under the Constitution, there's only one ad valorem tax. That's the general tax, the general 1% ad valorem tax. And there can be additions to that for general obligation bonds for cities and school districts and counties. If it's a special tax, which is another option available under the Constitution, it can be based on a variety of factors. It's often land use, residential, multifamily housing, single family housing, industrial, commercial, retail. And it can be based on density of use. It can be based on hotel room occupancy. Sometimes the number of CFDs have been formed to finance convention centers where it was almost like a hotel occupancy tax, but it cannot be based on the value of the property. There's only one ad valorem tax, and that's the 1% general tax.
Okay, thank you.
Sure thing. The second type of land secured financing tool are special assessments. Unlike CFDs, which employ special taxes with a 2/3 vote, assessment districts employ special benefit assessments that require a 50% plus one weighted ballot based on special benefit. Assessments are only rarely used these days, usually for discrete projects benefiting a handful of parcels, such as utility undergrounding or septic to sewer conversion within a specific neighborhood, because the California Constitution has been updated by initiative, most notably Proposition 218, to allow assessments only to finance special benefit and not general benefit, and to impose the burden of proof and litigation on the public agency. There has been a significant amount of litigation surrounding assessment districts, and most public agencies use CFDs instead of assessment districts whenever possible to avoid that risk. Next slide. I know the city has been successful working with the voters to approve a number of sales tax measures. Sometimes these measures can provide funding for public financing of capital improvements. In some cities, the sales tax measure is approved as a special tax by a 2/3 vote, and the bonds are specifically authorized as part of that process. More commonly, sales taxes are approved by a 50% plus one margin as a general tax that can be then used as a funding source to pay lease payments as part of a general fund lease financing. As you would expect, the primary benefit of a sales tax financing relative to some of the other funding options is that it typically involves a new revenue source for the city. The primary disadvantage is that it's difficult to secure that voter approval. Next slide. So I've spoken to this committee a couple times as it's been looking at EIFDs as a possible financing source. EIFDs offer two sources of funds that ultimately derive from the city's general fund and perhaps the general fund of other taxing entities such as counties or a neighboring city. The first possible financing source is incremental property tax revenue that's based on increases in assessed value within the boundaries of the EIFD, usually as a result of new construction. The second possible funding source is sales tax revenue. And under the EIFD law, a specific percentage of EIFD revenues, if sales tax revenues are allocated to the IFD, must be used for affordable housing and other specific purposes such as transit purposes. While an EIFD and other post-redevelopment tax increment financing tools offer a legal way to finance a variety of community improvements, including privately owned affordable housing, it's important to understand that they leverage existing resources. They leverage property tax revenues and sales tax revenues that otherwise would go into the city's general fund. So they don't generate new funding sources like GO bonds, CFDs, or assessments. Next slide, please. So now, unless you have questions about the funding of public infrastructure, I'll turn briefly to funding sources for public services. And I'm going to highlight three sources. First, sales tax, and then two types of special taxes, parcel taxes and Mello-Roos taxes. Next slide. As we discussed in the context of infrastructure financing, sales taxes can be approved in two ways. First, as a general tax with a 50% plus one voter approval, or a special tax with 2/3 voter approval. And sales taxes have a broad charter. They can be used for any lawful expenditure of the city. Compared to property taxes, sales taxes are justifiably criticized for two things relative to property taxes. First, sales taxes are aggressive tax, taking a larger percentage of income from low income workers than from high income workers or earners. And then secondly, sales taxes are more susceptible to economy-based fluctuations than property taxes, particularly parcel taxes and Mello-Roos taxes, which are a fixed amount that isn't tied to the property's value. Next slide. California cities have employed two flavors of special taxes for ongoing public services. The first type of special tax is a parcel tax. In essence, a parcel tax is like a CFD special tax, except that it's approved under a separate CFD law than the Mello-Roos Act, and it doesn't involve the formation of a community facilities district. Unlike Mello-Roos special taxes, parcel taxes are typically, if not always, employed on a jurisdiction-wide basis. Like Mello-Roos special taxes, they do require 2/3 registered voter approval. Like Mello-Roos special taxes, they can vary by reasonable factors such as size, land use, but they can't be ad valorem. And like Mello-Roos special taxes, they can escalate by index and there can be reasonable exemptions. Unlike Mello-Roos special taxes, however, they have some limitations. They have very few limitations on their use, while Mello-Roos does have some limits on how their taxes can be used. I listed a few California cities that have used parcel taxes and some of the specific authorized uses. Berkeley has levied a parcel tax for parks. Oakland has levied a number of different parcel taxes with voter approval for police, library, parks. Larkspur, Corte Madera, Fairfax have a paramedic parcel tax, and Piedmont had a very interesting parcel tax where it authorized a very long list of public purposes: police, fire, streets, libraries, parks, planning, and public works. And that's fine. It's still a special tax as long as it has a finite set of uses, even if it's a very large set of finite uses.
Chris, through the mayor, it looks like it captures many, if not all of most cities' needs. What's eliminated here?
Nothing. Parcel taxes can be used for any lawful purpose of the city. You just have to specify it in the ballot measure.
Okay, good enough. Thank you.
It's a special tax, so you have to list the special purposes in the ballot measure.
Okay.
And
Thanks.
Chris, as a point of clarification, if I can, I know that there's been court cases that have been working their way through about voter-driven initiatives that even if they're special taxes, if they are put on the ballot through a signature gathering process, that those are no longer a 2/3 threshold, it's 50+1. Is that still the case, or are the courts still taking that issue up?
So far, the courts that have ruled that if the parcel tax is introduced by voter initiative as opposed to by the legislative body, then it is subject to the rules that govern initiatives, which is 50%+1, and it's not subject to the 2/3 vote.
Okay,
And I'm
thank you.
sure there's a lot of public agencies wondering out there how to work with voters to initiate that process without creating any legal issues.
Well, and I think, just don't want to go too far down this rabbit hole, but I think that was the one that most of us were watching. I believe there was one that was sponsored by an individual council member, an individual mayor who helped with it. And then it became a question of, does that mean that it's city sponsored?
Yeah. So I haven't dived too deeply into those cases. I'd be happy to give you guys a little memo or summary of it if it would help you as you evaluate this.
Great,
Yeah.
thank you.
Okay. Next slide. Finally, Mello-Roos special taxes are commonly used to finance public services and in two different circumstances. First, when a developer CFD is formed to finance public facilities that the developer is obligated to construct as a condition for development, the CFD will often also finance public services. In that case, the services are those that the local agency may have obligated the developer to finance as a condition of development. Most commonly, those are landscaping and lighting of public streets and parks, open space maintenance, street maintenance, and even police, fire, and paramedic services. In addition to that, a growing number of cities are forming CFDs that are used to impose special taxes on landowners throughout the city when they request a discretionary development approval, usually for more intense use. Interestingly, Santa Rosa was one of the first cities to attempt this idea in 2006 when it formed a special tax district for that purpose. The city's land use ordinance, which obligated property owners to vote for special taxes levied in the CFD, was challenged by the Building Industry Association under the theory that it unconstitutionally impaired landowners' voting rights. The trial court ruled in favor of the BIA and Santa Rosa didn't appeal. Since then, a number of cities have successfully formed CFDs, just like the one that Santa Rosa formed, but the land use ordinance is different. Cities have learned from the Santa Rosa example, and rather than obligating the property owner to vote in favor of the CFD, the land use ordinance gives voters a choice. They can fund the required public service costs with a lump sum payment in advance, equal the net present value of perpetual service costs. They can establish some other funding mechanism, or they can vote to join a CFD.
Always glad to lead the way there, Chris.
Yeah, good teaching moment. Yeah. This type of ordinance has not been successfully challenged, and the BIA's latest effort to challenge one of these CFDs in San Ramon was unconstitutional, even though they took it all the way to the United States Supreme Court. I've listed a few of the cities that have formed CFDs to levy special taxes on developing property when they apply for development approvals, but it's a much, much larger list than the ones I've listed. So I'll pass the baton to Jan and Alan for an overview of the capital planning process, unless you all have questions for me.
Good afternoon, Chairperson Rogers and committee. Are you,
Go ahead, Jen.
okay. You'll recall that when we did the management partners presentation in March, the committee raised questions about general fund policies. And I indicated that we would begin working on them and supporting policies, because supporting policies really make for a much tighter general fund policy. The first one I ended up doing turned out to be capital planning, not the policy of itself, but the framework for us to talk about this afternoon before go ahead to drafting the policy. So one of the reasons that prompted sort of the priority of the capital planning policy is given, one-time monies, and also because it's the budget season and you're going to see a lot of requests for capital funding. And so the question is,
And
how
Janet-
do we get there?
Jen, let me cut you off for a quick second because I just want to make sure. Did we just deviate into 4.2, or were you adding on in 4.1? I apologize.
No, 4.2. That's why I
Okay.
stopped.
Yeah, I just wanted to make sure. I thought you were going to clarify and add some context to what Chris was
No.
talking about. All right, we'll do a quick public comment on item 4.1, and then I'll bring it back for council members, and then we'll start 4.2. My apologies. I thought you were adding something to 4.1. And I'm not seeing any hands raised. And Madam Host, did we have any emails ahead of time?
There were no public comments received via email.
Great. Council members, did you have anything you wanted to add on 4.1 before we moved on? Okay, great. Go ahead, hit it, Jan.
Okay. So today we're suggesting, potential approach framework to a formal capital policy. And just as a matter of heads up, what we thought we would do is bring it back to the committee in June and then do a study session with the city council. I think that's already been slated for July 13th. Next slide, please. So definitionally, I think you know what capital planning includes, but, build, replacement, improving assets, projects that require multi-year budgeting. Chris highlighted many of the types of projects that we tend to do in the state. Cost is generally the first thing that might come to mind, but more important, assets like roads, buildings, parks, sewer, and drainage really add to the health and the vibrancy of the community. And so that requires consideration of values and priorities, equity and transparency, and of course, funding alternatives and how we choose to carry out related work. The city has a list of capital projects. It's a big list with big dollars associated with it. But more than that is required, I think, before projects become shovel ready. Consideration as to financing alternatives, how best we realize value for money, and which does mean frequently taking into consideration the total cost of keeping the asset operational throughout its entire life cycle. I think it's challenging in any environment to deliver capital projects that have impact without some combination of pay-as-you-go financing as well as debt financing. And, I think the sum total of monies, one-time monies at this point that we've received are about $244 million. And it may seem like a lot. It isn't a lot, but we also need to take some time for those considerations and see if at least we can begin to address some of the current challenges of fiscal and operational capacities, which do converge when we're talking about capital. Next slide, please.
Do that, Jan, while you do that, when you say that we've received one-time funds of 244 million, do you mean that we have that in the bank, or do you mean that with the FEMA reimbursement process, which can take years, that's what we're expecting to get back?
I'm talking about ARPA. We haven't received that yet, but the potential of, the full amount of 244 million, ARPA funds, some of the reimbursements we've gotten, or I'm not really including the reimbursements, but the PG&E funds and CARES Act, and so the sum total of one-time monies.
Okay, I just wanted to clarify. Thank you.
Yeah. One of the things I know we talked about in a previous discussion was sort of the three pillars of organizational challenges for governments: environmental, organizational, and financial. And so the goal is to keep these considerations in mind. You'll see, for instance, that when the ARPA funds and, the final guidelines are released, we've seen some of them, there are going to be certain considerations as to what recommended spending might look like and how we go about funding, and what those funding priorities look like. But capital decisions overall need to be more than just funding decisions. They're also business decisions, risk quantification, some of which are okay for us to take, some that need deeper considerations. And we may also choose not to want to keep those risks to the city, but to lay them off on other partners. In this particular regard, I'm talking about P3s, for instance. That's one that comes up a lot, and is whether we should trade off. In the United States, we have the benefit of tax exemption. Most places around the world, Australia, Canada, England, the ones that do a lot of P3s, they don't have that benefit. But I think depending on the project, it may be beneficial, for a higher cost of capital, because developers' capital costs more money than tax exempt capital, to, use that source of funding to deliver projects much more quickly, as well as lay off the project risk, construction risk, credit risk, and if you wanted, even operations and maintenance risk. Obviously, all of those are paid for in the cost of financing, but they are an important consideration as well. In the same genre, we talk about discussion around value for money, meaning whole life costs, what it costs, not just to build and deliver the project, but operationally, what does that mean? And as well as other sustainability benefits. Whatever the choices are, it's really incumbent upon us to ensure that we sort of address the whole, other than making just funding decisions. So the next slide talks just about the typical sources we see for capital funding, depending on what the projects are, rates and charges, if we want a certain return on investment, formula funding needs that are usually a prioritization based on proportional need, grants and debt financing. Chris talked about some of those alternatives. Next slide, please. So here's a summary. I'd forgotten I put this slide in here, but here's a summary of one-time revenues, PGE, ARPA, FEMA, state of California. And that's just a recap by percentage of what they are of the 244 million. Next slide, please. And I'm going to skip this slide because I think it's somewhat redundant. In putting a policy together, one of the things we'll want to think about is how do we prioritize what gets done? I mean, the needs are really always going to be greater than the dollars that we have, even including one-time monies. And so early on, actually, when I first came to the city, one of the things that Jason Nutt and I shared, I had looked at how cities do prioritize funding. And I took a look at Oakland, I think Irvine, San Diego, and they have a prioritization. These tend to be the general categories that we see. And then they're sort of organized. Oakland, for instance, has a numbering system based on what the project is. Others just do high, medium, low priorities. And then there's a consideration as to what may be shovel ready. But whatever the preference is as to what the priorities are, I think the goal is to make the decision-making more deliberative of what the communities need and take some competitiveness out of the process, both for the city council and staff. Next slide, please. The secondary category behind the broader categories is funding availability and funding categories. Organized by funding categories. If you have restricted funding, such as the American Rescue Act Plan Act, what sort of capital investment might be possible under those funds. One-time funding, projects organized by unique funding categories like PG&E monies, perhaps the most liberal of all the one-time revenue streams. And then by asset classification, if it's mobility assets or public safety assets, that's one that comes to mind. For example, fire and what they desire to fund, whether it includes equipment and or buildings as well. Next slide, please. So in terms of the overall policy development, this is the framework for the capital planning policy only. The city does have a debt management policy. I haven't read it in detail. It was adopted, I believe, in 2017. We'll take a look at it and see if it stands as it is or whether there are some, modifications that might be helpful. But we'll also bring back, I think next will be the general fund policy, a liquidity and reserve fund policy. I didn't list the budget policy here, but there is one, not really fully developed, but a little bit, and something to start with and work with. There's an investment policy, usually gets amended every year and then sort of readopted with the budget. Next slide, please. So I'd appreciate just your thoughts around, particularly priority and how we talk about funding possibilities. And, as we formulate a policy, it's going to be pretty difficult, to put, well, it's not difficult to put into words, but we'd want to put something into words that, will work well for the council, and at least have the opportunity to walk through the study session, get feedback, and then perhaps do a final draft. Our timing for that is, this says the end of May, but in June, we're going to come back to this committee, and then in July, as I said, the study session with the city council around the capital policies. And that concludes the presentation.
Okay, any questions, Tom or John? John?
And not a question, just a comment. I mean, a lot of the conversation around budgeting and debt and everything that we've seen today can very quickly get into the weeds. And what I'm hoping for and expecting, I'm hoping for clarity and simplicity wherever possible, because it's very easy to drop into fiscal speak. And I would get concerned that we may start to lose cognizance of what it is we're talking about, and therefore making it difficult to make a decision. I'm not sure what necessarily would need to be adjusted, but I know that those that are not fully, and myself included, fully adept at discussing financial situations and debt financing and bonds and all of the things that this subcommittee deals with, it's going to be really important that we create an environment where the council is going to feel very comfortable asking questions and getting good clarifying answers to allow them to make an informed decision. And I guess that's really what I'm hoping for. And it's I'm not sure exactly where that's going to fall, but it's going to be really, really important, I think, because this is very important information to have, and not having a full understanding of the depth, not only of the questions but the answers, will be so super important. It's just easy to drop down into the weeds when having these conversations.
Tom?
I would just want to echo some of that too, because I'm kind of struggling with what nut are we trying to crack right here? To put it into context about, I mean, are we just trying to look for more revenue for operations, or is it a specific project? Because trying to get our arms around it, I think is more of a challenge. And so even just with Chris's first presentation, I get all that, but what are our potential reasons for going in whatever direction we want? I'm still struggling a little bit for the context, quite frankly, of both presentations, so that we can either make recommendations to the entire council or even give feedback to the entire council. Here's why we're coming to you. Because I agree with John, this is all important stuff, but put it into context. This is why it's important now.
Yeah, this is all.
Jan, before you respond, I'm sorry to interrupt. I just wanted to piggyback on something that Tom just mentioned. I think, and I just thought about this, I think it's going to be really, really important to articulate the problem statement. So once they hear the problem and they understand the problem that we're trying to address, then these solutions, some of which are more palatable than others, may start, they might start to want to start asking questions about certain solutions. So having a really clear and a well-articulated problem statement regarding our fiscal health is going to be really important.
So I love the idea of stating the problem statement. I think that's, fairly straightforward. You're probably likely, perhaps we should be conscious about doing it. It's really easy when we're talking about capital, because this is just capital focused, not operationally focused at all, just capital focused, to get into the necessary conversation about debt. But only to say it ought to be part of the conversation, not in terms of mechanisms, but I think from staff to council, how might we think about financing this? This being whatever the project is. And, also, though, I'll be honest and say this in the presentation, what you really heard me talk about partly is, it's good to know what capital projects we have, but we ought to be asking certain questions about, what it means to the city in terms of overall cost, and what is the analyses that we should be looking for when you enter into a discussion about a capital project. So for instance, because this is a nice one actually to talk about. When I first came to the city, I said, did we think about, possibly instead of using cash, using, financing for fire stuff? Great asset, gets it done more quickly, gives something in the community, gives people an opportunity to move forward from a trauma while they're looking at. And so that's sort of the, for instance, of where the subject of debt might come up, like that for one. Are you better off with cash, or are you better off with, and I grant there's more discussion and analyses that need to go with that, but it's the analyses and sort of, where is this in the priority?
And I can, John, I can try to give you what I think the problem statement is, and then Jan can correct me.
I'd love you to give it to me.
If I'm wrong. From my vantage point, it seems like the problem statement is that the general fund follows the council's priorities. And oftentimes our deferred maintenance or other capital projects are not the most immediate need of the city. So how do we make sure we don't fall too far behind on those, that they have specific funding for them that doesn't then also hamper our ability to address our priorities. It's not a
And I-
succinct
you know-
problem statement, but am I getting to it, Jan?
Yes,
And
that
I
helps a
agree
lot.
I agree with that, but I'm talking about actually, and this may be oversimplification. What is a capital project? The council's going to need to know.
Oh,
I mean, yeah, I mean, see, this is what I'm talking about. And not only is the council going to want to know, but as the community observes our deliberation, the community needs to know what does it mean for a municipality to have a capital project. Giving some examples and why we're having this conversation, and and it goes back to the problem statement. This is why this is so important, and to get kind of I don't want to. I'm just going to use the words because it resonates with people, because I need things dumbed down. If I don't understand the subject matter, I need it dumbed down to talk to me like I'm stupid, because these things can be very complex, and they're not things they're not conversations that most people have on a regular basis, unless that's your job. So I would encourage in the beginning, especially some real basic conversations about the language that we're using, the definitions that we're using, and the reasons that we're talking about it. And that's what goes back to that problem statement. So that's my request, because I think it will help us move forward if everyone tries to get on the same page as we discuss these what can be very complex conversations.
And
I'm
where a little
smiling
bit-
because I wrote it in the presentation and then said, oh, they know what that is. So,
But for me, something that this committee talked about, which is, I think, right in front of our face, is the public safety measure O, which quite frankly, I don't think, because it's got capital improvement projects and it's also got operations, and it also requires 2/3 voters, right? Into timing, what Chris's presentation was with the public safety measure O, I've got some concerns. I mean, 2/3 threshold, how do we have that conversation? Because for me, that is a priority. Our public safety measure O, for right now, we haven't given direction on what are we going to do there, because I know, Chris, you're well aware of that. And I think you mentioned it at our last meeting, the timing of going to the voters, if we go in that direction, we need to script this whole thing out. And that's where I'm not sure what's all the timing, where does this all fit in what's coming before the entire council?
okay.
point.
And Tom, would you prefer if we schedule in our next long-term finance meeting a specific conversation about the Measure O measure?
That would be my preference. I think at the last meeting, I said we should have talked about it yesterday.
Yeah.
It's right there. And
it's
just give me-
serious. It's real serious.
Okay.
All right, we'll make sure we have that on. We'll go to public comment on item 4.2. Not seeing any hands. Do we have any other comments?
There were no public comments received via email.
Okay, we'll move on to item 4.3. And I will mention I have another obligation at 5 o'clock that I might have to jump off a little bit for. So I'm going to turn over running the meeting to Tom. Good luck, Tom. But I'll stay on until 5 o'clock.
Sure. So, Chair Rogers and members of the committee. So I think the last time I was before you, we talked about the timeline for putting a ballot measure on, and this is kind of dovetails in from Councilmember Schwedhelm's comments about the public safety special tax known as Measure O. So this is what I prepared for you, and we can just go on to the next slide. It's only one slide. I got together with our city clerk and the folks that did our polling and education programs for the last couple of sales tax measures that we did, and to get kind of an idea of what we're looking at in terms of putting any measure on the ballot. But let's just, talk about former Measure O if you want. So one thing that we need to do when planning for this, and I think it goes along with what we could discuss at the next meeting, is having an understanding for the legal deadlines for calling an election, doing some initial polling to kind of narrow in on the type of tax. And this would be if we were looking at multiple types of items that we would want to, or revenue items we would put on the ballot. Developing an education process, and then doing some final polling to make sure that we still have the support where we're going. So as you know, or if you don't know, the public safety special tax, known back in the day as Measure O, sunsets on March 31st, 2025. We have considered other, getting to my point about different revenue types, we have looked at different revenue measures in the past, such as modernizing our UUT, increasing transient occupancy tax, general obligation bonds, dealing with affordable housing, things like that. If we were to focus specifically on the public safety tax, we would need approximately a month to develop the survey questions and get ready to ask or to set up the survey to go out to be in the field. And we would probably do that. It was suggested that the best time to do it would be mid-July through early August. You're gonna kind of have the people back from the 4th of July holidays and prior to them going out for Labor Day holidays. So that seems to be a good data collection period. And it would allow us to get some polling information to understand where we are in the community, and do that prior to the recall election that will happen sometime in the fall, most likely in November. So you want to try to get in touch with the electorate before they are starting to be influenced by information coming out relative to the recall election. And then once you have that and the recall election is done, then toward the beginning of the calendar year, that's when you can really start doing the education, start making a rather robust effort in education in advance of August 9th being the last day, the last regular council meeting prior to the deadline to call the election. The deadline to call the election would be August 12th, 2022. So we would really need to have the education period going, whatever that may look like. Probably do some final polling around June, just to make sure that that either we've increased support or that at least our support is still in the passing area, and then go to council with the resolution to call the election. So that, in a nutshell, has some hard dates and then some good kind of guidelines to go through that would help that move forward. So with that, trying to keep things really brief here. If you have any questions or further discussion, I'm happy for that now.
Alan, just a quick question.
Sure.
So with the timeline that you've laid out, sort of straddles the line between this year's budget and next year's budget. Did either of those budgets anticipate funds for polling or informational programs?
Well, we'd have to be careful with the informational programs and how that's paid for. But for the polling itself and that type of work, I don't believe that is in the budget. We would have to, so we would have to include that.
Okay, and I think my expectation would be that that's a line item that the council has an opportunity to discuss coming into our budget discussions next week, if we're going to be able to hit that timeline that you've laid out of early July.
Yep.
Anybody else?
I had a question.
Sure.
Apparently my internet's unstable. When you talked about the recall election, Alan, because I know our neighbors to the north may be having one, the DA's having one, the governor's having one. Do we have any idea, are those all going to be on one election or 3 separate elections? Chris, you know?
It's very unlikely that as I'm hearing it, it's very unlikely that the DA recall will be at the same time as the governor's. And the fact that the potential Windsor one hasn't even gathered signatures yet makes that one unlikely to hit that target as well.
Okay.
That's what I'm being told.
My concern is as we're polling, the impact, because that's going to be on the news, and the difference between, okay, city of Santa Rosa, it doesn't bode well for any, I think, elected municipality to ask for more funding when these things are in the news. That's a concern I have.
And I do think that's one of the considerations we talked about before. It all does depend on dynamics. It's something that I've been talking with supervisors about, is that their problems with their fire tax hasn't been the content of the measure so much as the timing of their measure. And it's something that I want us to be really cognizant of. If this is just my 2 cents, is if the governor is recalled in November, you're going to have a voter base that is more likely to show up to vote for a tax measure the following November. If the governor is not recalled, there's probably going to be a whole lot less energy from the typical voters who would go for that. And perhaps 2024, though it doesn't give us much of a cushion, 2024 might be a more friendly electorate for a city type measure. That's just my 2 cents. Go for it, John.
Thank you. This is in the same kind of piggybacking on this general conversation about timing. Even though 24 is pushing right up against the limit, it's timing is everything. And are there consultants that could help us on our timing of this, and knowing some kind of political consultant that could look at our situation, look at this very unique situation around recalls? I mean, I don't know the last time this all happened, but my guess is maybe not in anyone's memory, to help us in this really unique situation to decide on the timing of going after the public safety measure O redo or extension.
Right. So one of the consultants, so we use 2 consultants when we do polling. So we'll use the last 2 we've used Godby Research to actually go do the survey, analyze the data that comes in and that. And then we use what used to be known as Terrace Barnes. They have a lot of more partners there, and they provide strategy. They help us with kind of crafting the not only the ballot language, but then the what education materials that we can do as a city. So yes, they are, and that's why I reached out to them, because I wanted to know what they're dealing with other clients that are dealing with the recall. And they were the ones that specifically said, hey, get some polling done early, figure out where you are, and then kind of lay low for a little bit, let the recall do what it's going to do, and then pick up from there. And I would guess what they could tell you, and again, I'm not them, but I guess you could look at where we are polling in winter or in summer, do the education, then, like I said, do another, short track polling to make sure where we are in support. And if we're not where we need to be in support, then that clearly shows that, well, maybe 2024 is, I mean, that just played that hand for you right there. And you kind of have that idea. So I'm guessing that's what they would tell you. And we could clearly have a more robust talk about that.
And we do have to do this on a general election.
No, it's a special tax, so it can literally go at any election. And that is also something that we may want to discuss, and that they also brought up, that, you do have other election opportunities, but there's pros and cons to all of that.
Yeah, and we also don't know what other sales tax measures may be popping up throughout the county. I mean, there could be a big groundswell of over kind of what people being overwhelmed by sales tax requests, which is always a risk, of course. And back to the timing is everything. And if we're the only one out there asking, which is pretty rare, we could be in better stead. But it's just so hard to know. And this is one of those sales taxes that we need to get right, and we need the public our community has been very generous in supporting Measure O, and it will be our responsibility, or it'll be the other people's responsibility out there to remind the community of how important it has been to us, the quality of our public safety, and funding it, and all of those great programs that it has funded. People, I think there's a tendency to forget where that money is coming from and where we would be without it.
So, Alan, can I just, are you looking for direction from the subcommittee prior to getting, or is that what your ask is? Would you like John and I to give you feedback on next steps?
That would be great. I'm hearing that it looks like next meeting is something where we want to have a fuller discussion. So if you want to have but if there's if there's some specificity to that you want to help me out with, I'm more than happy to hear it.
Okay, before we go there, let's open it up for public comment, and then I'm ready to give some feedback. So we will open it up for public comment on item 4.3, the ballot measure timeline. Any members of the public like to give comment, please raise your hand or dial *9 if you're on your phone. I'm not seeing any raised hands. And did we have any pre-recorded messages?
No, there were no public comments received via email.
Great, thank you. Okay, so Alan, for me, well, go ahead, Mr. Sawyer, you want to go first?
Well, I'm just, as long as, we're not doing it today. So as soon as possible, I would say, given our crunched timeline already, if we were trying to make decision on timing, having a real, targeted conversation on Measure O, the public safety Measure O, I think would be
Are you guys there? I'm having internet.
Yeah, no,
yeah.
I'm here. John,
Okay.
you kind of froze up right at the end there, but I think what you were saying was that let's have that targeted discussion on Measure O
Yes,
in June. Okay.
yes.
Okay. And for me, I'm taking the advice of the polling firms. I'm comfortable with that. One additional bit of information I'd like, and Alan, would this go before the full council eventually?
It, let me think here. I don't think it would need to until we actually did the resolution to call the election. So we could, but where we would really have to is right before the election to call it to before August 2022.
So I don't want to complicate matters, but I just think it might be healthy for this to come back to the council. I just understood Measure O oversight did not come to a recommendation to approve the budget. And it might be nice. I don't know how staff was planning on presenting that, but actually get clarity on that. And the one piece of information that I think would be helpful for all of council to do, that depending upon our different timelines, there probably are some impacts to current staff and or projects. I mean, are we going to have to do a hiring freeze? Are we going to have to lay people off? What impacts, if the longer we wait, will it have on the operation of the current positions and programs funded by Measure O? That's one piece of the puzzle. I guess there are some impacts. I just don't know what those are, but that would be information that would help me decide what direction to go in.
And we also have two new council members who are who may or may not be up to speed on the impacts of the benefits that we have derived over these many years and the impacts if we were not to go forward. So I think keeping the council up to speed on what this body is recommending, I think it'll be really, really important, so that there's no surprises when we make that final recommendation with the ballot, with going forward on a ballot.
Sure. So we'll focus on June 10th, which is here to have to focus on Measure O, and moving forward, I'll try to get some impacts for that meeting, so that we can kind of get that there, and then I'll reach out to the polling firms too and just kind of get some more information from them. In the past, we've looked at different types of taxes. It kind of sounds to me that we are just focused solely on making sure that we move forward with Measure O. That is a large chunk of revenue. It's going to be more than really any of the other TOT or any of these other things that we've looked at in the past. You're looking at $9 to $10 million worth of revenue that's coming in. That's and has immediate impacts to programs, as you mentioned, Tom. So I'll put our focus on that, and we'll be pretty, we'll go with that.
Yeah, and for me, just to reframe what I heard you say, the consequences for Measure O not failing are much more significant than any of the other funding options that we're looking moving into the future.
Right.
It's deserving of this major focus, I believe. I think we're in agreement with that.
Understood.
Okay, so that's it for item 4.3. Next, I guess it'd be item 5, next meeting agenda items. I think you got direction from the subcommittee about just what we talked about, Measure O public safety.
And I think there's one more that we want to have on there, and Jan can correct me if I'm wrong, but I think we're looking at also a presentation on one-time monies. And this would be in advance of going to the full council in July.
Yeah, and their
Study
uses.
session on that.
Yes.
Okay, great. There's 2 items. Okay, then let me open up for public comment. If any members of the public would like to make comment on next meeting agenda items, is there any member of the public who would like to make such a comment? Not seeing any hands raised. Was anything pre-submitted?
No, there were no emails received.
Great, thank you. Alan, did you get what you needed? And Jan, did you get what you needed from the subcommittee today?
Yes, sir.
All right, having no further items to discuss, meeting is adjourned. Thank you for your attendance.
Okay, bye.
Thank you.